The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule. And that's all the rules there are. I mean, if you buy things for far below what they're worth and you buy a group of them, you basically don't lose money.
Warren, what do you consider the most important quality for an investment manager?
It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. You have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Because this is not a business where you take polls, it's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
Welcome back, rich followers. We hope this video inspires you to get started on your dream. So please watch until the end. And if you are new here, consider subscribing so that you won't miss other educational videos like this. Let's get started. In this video, we go over some of Warren Buffett and Charlie Munger's famous quotes and sayings to questions that people have wanted to know.
I think the president's action on steel probably had something to do with the timing of the decline, but I don't think it was the factor which and the amount of the decline. For some time, stocks have been rising at rather rapid rates. Corporate earnings have not been rising. Dividends have not been increasing, and it's not to be unexpected that perhaps a correction of some of those unusual factors on the upside might occur on the downside. The stock market has been a good forecaster from time to time in the past. It also has been a rather poor forecaster occasionally. For example, the last 4 or 5 years, the stock market has been booming along and presumably forecasting better business, which has really not materialized. Corporate profits are not any better than they were 5 years ago, but stock prices are 50% higher thereabouts. So maybe the stock market is really correcting a previous incorrect forecast this time rather than making a new correct one.
I've had calls from a couple of friends in the last month that don't know anything about investing money. They've been unsuccessful and everything else. And, one of them called me the other day and said, I'm forming a small hedge fund, 125 million he was talking about. And he liked the thought that since it was only 125 million, maybe we ought to put in 10 million or something of the sort. If you looked at this fellow's Schedule D on his 1040 for the last 20 years, you'd think he ought to be mowing lawns. But he may get his 125 million. It's just astounding to me how willing people are during a bull market just to toss money around because they think it's easy. And of course, that's what they felt about internet stocks a few years ago. They'll think about something else next year too. But if I were working with a small amount of money, the universe would be huge compared to the universe of possible ideas I work with now. When I started, I went through the pages of the manuals page by page. I probably went through 20,000 pages in the Moody's Industrial, Transportation, Banks, and Finance manuals. And I did it twice. And I actually looked at every business. I didn't look very hard at some. That's not a practical way to invest tens or hundreds of millions of dollars. So I would say if you're working with a small sum of money and you're really interested in the business and willing to do the work, you will find something. There's no question about it in my mind. You will find some things that promise very large returns compared to what we will be able to deliver with large sums of money.
I absolutely advise students. I had students last week, 160 of them from Harvard, South Dakota State. I just tell them, try to find your passion. And I mean, may not find it the first time, but don't sleepwalk through life. Find something that you really enjoy doing if you can do it. And not everybody's lucky enough to be able to find that, but it ought to be your goal. To make $10 a week more doing something that you don't feel good about compared to something you'd feel good about, make the change.
Warren, what do you do that's different than 90% of the money managers who are in the market?
Certainly most of the professional investors focus on what the stock is likely to do in the next year or two, and they have all kinds of arcane methods of approaching that, but they do not really think of themselves as owning a piece of a business. The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years. All the ticker tells me is the price, and I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high, but prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line with what my value is.
So Buffett chose to stay in this world, Omaha, Nebraska, where corn grows just minutes from downtown. Now, Omaha is a nice town, but nobody claims it's a world financial center. Here, the only thundering herd is actually on 4 feet. Don't you find Omaha a little bit off the beaten track for the investment world?
Believe it or not, we get mail here and we get periodicals and we get all the facts needed to make decisions. Unlike Wall Street, you'll notice we don't have 50 people coming up and whispering in our ear that we should be doing this or that this afternoon.
You appreciate the lack of stimulation
I
here?
like the lack of stimulation. We get facts, not stimulation here.
Can you stay away from Wall Street?
If I were in Wall Street, I'd probably be a lot poorer. You get overstimulated in Wall Street, and you hear lots of things, and you may shorten your focus, and a short focus is not conducive to long profits. And here I can just focus on what businesses are worth. And I don't need to be in Washington to figure out what the Washington Post newspaper is worth, and I don't need to be in New York to figure out what some other company is worth. It's an intellectual process. Now, the less static there is in that intellectual process, really the better off you are.
What is the intellectual process?
Intellectual process is defining your area of competence in valuing businesses, and then within that area of competence, finding whatever sells at the cheapest price in relation to value. And there are all kinds of things I'm not competent to value, but there are a few that I am competent to value.
Have you ever bought a technology company?
No, I really haven't.
In 30 years of investing, not one?
I haven't understood any of them.
So you haven't ever owned, for example, IBM?
Never owned IBM.
Right.
Marvelous
Right.
company, a sensational company, but I haven't owned IBM.
And so here is this technological revolution going on, and you're not going to be a participant.
Gone right past me.
Is that all right with you?
It's okay with me. I don't have to make money in every game. I don't know what cocoa beans are going to do. There are all kinds of things I don't know about. And that may be too bad, but why should I know all about them? I haven't worked that hard on them. In the securities business, you literally every day have thousands of the major American corporations offered you at a price that changes daily. And you don't have to make any decisions. Nothing is forced upon you. There are no called strikes in the business. The pitcher just stands there and throws balls at you. And if you're playing real baseball and it's between the knees and the shoulders, you either swing or you get a strike call on you. If you get too many called on you, you're out. In the securities business, you sit there and they throw U.S. Steel at 25 and they throw General Motors at 68. You don't have to swing at any of them. They may be wonderful pitches to swing at, but if you don't know enough, you don't have to swing. And you can sit there and watch thousands of pitches, and finally you get one right there where you want it, something that you understand, and then you swing. And
So you might not swing for 6 months.
you might not swing for 2 years.
Isn't that boring?
It would bore most people, and certainly boredom is a problem with most professional money managers.
There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short. And nobody wants their windpipe stepped on. If the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said for a 1% interest in all the farmland in the United States, pay our group, let's see, $25 billion. I'll write you a check this afternoon. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. It isn't going to do anything. The farms are going to produce food. If I've got all the Bitcoin, if I'm trying to get rid of it, people will say, why should I buy some Bitcoin? Why don't you call it Buffett coin? Make your own or something. I'm not going to give you anything for it.
Warren, your approach seems so simple. Why doesn't everybody do
I
it?
think partly because it is so simple. The academics, for example, focus on all kinds of variables. So they focus on whether if you buy stocks on Tuesday and sell them on Friday, you're better off, or if you buy them in election years and sell them in other years, you're better off, or if you buy small companies. There are all these variables because the data are there, and they've learned how to manipulate data. And as a friend of mine says, to a man with a hammer, everything looks like a nail. And once you have these skills, you're just dying to utilize them in some way, but they aren't important. If I were being asked to participate in a business opportunity, would it make any difference to me whether I bought it on a Tuesday or a Saturday or an election year or something? It's not what a businessman thinks about in buying businesses. So why think about it when buying stocks? Because stocks are just pieces of businesses.
If you found value in this video, we would like to give you another video for you to enjoy next. Please like this video and share it with your friends on social media. Don't forget to subscribe if you are new here, so you won't miss another one of our videos. The more you learn, the more you earn.